Hi everyone, welcome along. And guys, so who's in the room with me? I've got myself and another co-host under the same name. Is that you, Jeff?
That'd be me. Howdy do.
How do you do, mate? How you doing? Welcome along. I think Julian will be joining us in a minute. I've just come out of a session with him with his pilots program that he's running. I just want to check, guys, that we are live on YouTube. Jeff, if you can talk for a few minutes, I'm just going to log in and check that.
Right, mate. I can see us live on YouTube. We are going. I hope it's the right channel, but there are a few people.
We are on the
in
right
the
channel
room.
today. We fixed that up, so that's going to be
Happy days.
fine.
Yeah, we
Yeah,
are
we did
live.
get that sorted out. Yep, there we go.
Hi, Raymond.
Hey, guys.
Rightio, everybody. How we doing? We are going. Hi, Julian. How you going, guys? It's the Mother's Day edition of Trader Talk Radio today. Thanks for being with us today. Welcome along. And look, we've changed the format, as you guys know. We're having a gentleman come in or someone coming in and doing market analysis today. We're fortunate to have Julian with us to do that, and after that, we'll be doing technical analysis with Jeff. No ANZ today. She is enjoying a Mother's Day dinner with her children tonight. Jeff, we'll come to you reasonably soon and do some technical stuff. But Julian, what are your thoughts on the market?
Hey, Paul, how are you? And hello, everybody. Hi, Jeff. And
Hi,
welcome
Jules.
to everybody. Welcome to everybody wherever you are in the world. It is sunny and unseasonably warm New Zealand. I think global warming has its advantages. We don't get the pollution, but we do get the hotter weather. So thank you, Northern Hemisphere, for making our lives slightly more pleasant during autumn and early winter.
Mate, before we jump into markets too much, we are 2 weeks away from inviting the first public attendees or Access to Wealth attendees into your pilot program. We're underway with a small group, just testing it all out. How are you finding? How are you enjoying it?
Yeah, I'm enjoying it quite a lot, Paul. I've been coaching and mentoring students for a few years now, and my key goal with all of it is to get everybody to focus on what they're really trying to get out of trading, and I think we're achieving that so far with the small group we're working with at the moment. We're certainly questioning their values and how they're thinking about trading, and that's good. And so the goal here is to try and make sure that we turn everybody into a better trader who comes on the program. That's the goal. I don't have any doubt that we will do, but it's we do look at the more advanced methods of trading, not in fact in terms of actual methodologies and systems themselves, but just the philosophy and the approach we take. We take to managing our account and also managing trades themselves and getting a little bit better at the setup. So 3 key methodologies: setup, trigger, and the risk management, the cornerstone of the program, Paul. And I invite anybody who'd like to spend some time with me to look into that program. I think it's going to be very good for you. Perhaps, Paul, you can talk more to that, because I'm obviously the person promoting it, but it's I'm very confident that we can make better trade out of anybody who comes along.
Look, it's one of the things that I'm really enjoying with it, Julian, is that it's different. And so I'm sitting in there, and obviously I spent a lot of time talking with you about trading over the years, but it's really nice to be sitting in a program where it's not all about while you talk about the 3 stages of trading, we're not sitting there going, this is strategy, entry, stop loss management. It's more about understanding the market, understanding yourselves, understanding how to trade. It's a very different approach to it. And I think it's really nice. Different people learn in different ways and different people teach in different ways. But it's nice to be in something which isn't just you wait for this to happen and then you do this, and you wait for that to happen and then you do that, where you're encouraged to have a little bit more responsibility for the way you trade. And I can see why people that you mentor have gone really well. Look, mate, we will send something out. Today is the 10th of May, unless I've gone somewhere bad. On the 17th of May, we'll send something out in the email to the team about your program. We'll price it up and that kind of stuff for everybody. And we're going to take the first couple of guys in on the 24th of May, I understand. So I think we'll target 2 people to join on the 24th of May and get it underway for that. Anyone that wants to let James know or let me know there's a little expression of interest, we will let you know. We'll probably do a deal for the first couple to come in and not many after that. It's in all honesty, Julian, and I know it's more difficult to say things when you're here, but I don't know any other institutional traders that are taking people on and helping them to teaching them, small group. We're looking at having no more than 4 to 1 in that any stage. So it's not a mass produced thing. It's a very much a small group, a chance to chat honestly and openly about how you're going, and do some sort of non-judgmental place. So it's certainly different, certainly interesting, and we'll talk some more about it, mate. A lot of people, you know, and I'm one of them. I know we used to talk about from a different point of view, but I believe that the US consumer drives demand in the world, and as they lose their jobs, that no matter how much stimulus the government puts in, eventually stock markets will fall and the US dollar will fall. And a lot of people got caught on Friday looking for an NFP number, which was bad and worse than expectations, I think, and we didn't get it. And the US dollar rallied, and I'm imagining the stocks rallied as well. What are your thoughts on the market from that point of view? Are we going to see some US dollar weakness? Or do you think it's just going to be a safe haven? And well, what do you think about the US dollar, mate?
I'm going to take a step back, Paul, if I may. Actually, I'll tell you what, I'll answer your question first. I'm at the moment, I have a relatively positive attitude towards the US dollar, and and therefore I'm not as bullish on some of the other cross currency and some of the other pairs as some of the other currency markets. Excuse me, guys, it's Sunday evening. Some of the other currencies as other people are at the moment, but I have a caveat around that. At the moment, I feel that the correlation between the stock market and the, let's call it the commodity dollar currencies, is very high. For those of you that may or may not be aware, one of the things that's been supporting the commodity currencies this week has been the relatively interesting ascent of oil. I know we don't have Ainsley around this week, but oil hasn't, forget the percentages, because at these prices, percentages don't seem to make a huge amount. Oil is trading positively, but if you go look at some of the condensates off the oil market, so something like unleaded gasoline and heating oil, those markets are in a medium-term trend and bottomed out pretty much off that horrible day we had when the contract switched over. You also go look at the corn and the wheat markets, they're bottoming. You go look at sugar, it's trading well, copper's trading up. There's a lot of things in the commodity space which are giving me the sense that the economies in the world are getting back on their feet, and they're getting back on their feet quickly. One of the worry warts that I have is the most extraordinary performance that I've seen possibly in financial markets for a number of years, which is the NASDAQ. The NASDAQ is unbelievable. It has, I think, set a new high for the year on Friday. That includes the COVID market. That is, I'm trying to think of adjectives, but I run out after extraordinary. I do get why the NASDAQ is insulated from all of this.
Here
because
it is, mate.
Yeah,
Not quite, they're not quite new highs for the year, but certainly getting up there.
Yeah. And look, the 60%, I think, of the NASDAQ is made up of the FANG stocks. And it's very clear to everybody that they're on a bit of a rip roar at the moment. And that is not a market that's a bear market, right? That just looks like some kind of horrible correction. One of my worry warts about it is, well, we sort of, we got to think as traders, right? We know all of this. It's happened. The NASDAQ's extraordinary. It's an amazing market. You go, could you compare that chart, Paul, and then just put the FTSE up? Don't put it up next.
That's going to close the gap.
Yeah. And now you put the FTSE up and you'll see how right. Now, if they want a telling chart about underperforming stocks, right, there's a telling chart for you. Right, two different types of stock markets composed of two different types of stocks. So, you can't get bearish on the NASDAQ, but you might want to get bearish on this one because, my God, it hasn't really rallied very far, has it? So if I was looking at this one, I'd be quite negative on stocks and say, well, they haven't done a very good job this year. If I'm looking at the NASDAQ, I'd be quite excited going, well, that was just a funny old sell-off and we're back on the highs again. So what's the problem? It looks like the NASDAQ's going to go to a new high altogether, which again would be rather exceptional and quite extraordinary.
Both approaching these gaps, aren't they? They've both got gaps they're getting pretty close to. NASDAQ's getting pretty close to having a look at closing this one up, and the FTSE had a bit of a look at its gap and then pulled away from it.
Yeah, exactly. And look, I think exactly. So I still believe the FTSE might have another go at that. And I'm quietly confident. I think that the stock markets are going to do sort of okay over the next week or two. I don't think they're going to go. If they do go down, they won't go down too far. There's a buy point coming up in the market towards the end of the month, and I'm quite positive about stocks from sort of the end of the month onwards through April into the half year end. And I think that's a seasonal pattern that's sitting out there. I would have loved to have seen a bit of a sell-off now, so we can start ourselves off in April with a reasonably good buy point, but it doesn't seem that we're going to get that at the moment. But we're still only 10 days into the month. There's plenty of time left yet, and the volatility is so low at the moment that it's very possible that any spike in volatility will become self-reinforcing, and we'll see those markets move a lot quicker, a lot faster. The catalyst, I'm just not sure what it's going to be. My sense here is that at the moment we've got through the reporting season with no trouble. We've got through the pandemic with obviously significant losses, but now since the things of the stock markets recovered, it's like, well, where's the bad news on the pandemic coming from at the moment? If it doesn't bring the country out of lockdown fast enough, or if it continues to show a worsening effect, so we have an inbuilt second wave, something like that you could call it, then I think there may be some more trouble ahead. But at the moment, there's an awful lot of bad news that's been discounted by this market, and maybe the market, we're thinking about this from the wrong point. So I'm not that negative on stocks. So if I can't be negative on stocks and I've got commodity prices rallying behind me, I'm really struggling to be commodity dollar bearish at the moment. I want to be, and I don't think the technicals are supporting much more upside move from here, but I'm just not getting the right signals to tell me that it's time to go short and go long the US dollar. Again, despite the seasonal supporting a longer US dollar and a short everything else seasonal scenario at the moment. So that's my thoughts, Paul, around the markets vaguely. In terms of individual currency pairs, we've looked at, so we've had a chat about the dollar yen a few minutes ago. If you could just pop the dollar yen chart up, I think I've just got one comment on that, which is at the moment, the interest rate differential between the Japanese bond market and the US dollar bond market is the lowest it's ever been, I think going back 30 years. And normally that interest rate differential, the wider it gets, the higher dollar yen goes. So now it's got a lot narrower. I think the move down in dollar yen is not sufficient enough for that collapse in that yield spread. I believe dollar yen should be somewhere sub 100, probably from an analytical point of view, possibly into the low 90s. It's overbought. It's on a purchasing power parity basis. It's the yen is too cheap here and the dollar's too expensive. So now there's no real reason to hold it because of a yield reason. Then I don't know why people are holding US dollars against Japanese yen. So my overall thesis is fundamentally I think it should go down, but that doesn't mean to say it's not going to be a rocky road trying to do it. Clearly the market tried to break lower this week, and we saw that happen. Monday, Tuesday, Wednesday, Thursday, and then Friday it sort of reversed a lot of those losses and ended up, not that badly off. But if you keep looking at that chart, that still looks to me like lower lows and lower highs, and therefore the trend is down. You could look at that and go, well, maybe it's coming to an end, and maybe. But often with these patterns, I've also seen them turn straight down from here and go back down to the lows at 102. So let's not get ahead of ourselves. We know that the fundamentals are backing a lower dollar yen, and for the time being, the trend is down. So I don't see any reason why you wouldn't continue to trade the way we've been suggesting for a while. And if you just put the euro up for me,
I agree with that. Can I just talk with this for a second, Julian? Just interesting. I'm just going to put next week's weekly pivot on this chart, and I know you're not a pivot trader personally, Julian, but this week took off from weekly pivot to start its move down, and last week took off from weekly pivot and made a bit of a move down, and we even tried the week before to get pretty close to weekly pivot and start a bit of a move down. So I'll be pretty interested to see if we can get a bounce around here on Monday and just get down below weekly pivot and see where they're going to put another leg in for something technical. I think below weekly pivot it's pretty easy to become a bear on this again. I agree with you, by the way, lower highs and lower lows. Where am I going next week, Julian?
Well, actually, if you just hang on to this chart, Paul, just for 2 seconds. So,
Yep.
And guys, those of you that know my methodologies and the way I tend to think about these things, the price action will confirm everything. So my question to you as traders here, I'm not going to give you the trade, but I'm going to tell you what I think you need to do is go look at that daily bar chart and figure out where, if you are long of dollar yen, you're wrong. So where do you need to sell it when everybody has got the wrong position on? And it will probably be at some point, one of the lows of last week on the daily bar chart will be a key entry point for you going forward. So have a think about that. Where is everybody wrong from Friday? And that will probably give you the next trade entry point, if you like, for trend continuation. If we don't go down that far, then that's probably saved you an extra trade. But you know, my thought process is look for weakness here and take it when it turns up. If we could look at the euro, please, Paul, if that's okay.
Yep.
So one of the challenges I have about the euro, the overall pattern, I probably need Jeff in at this point. The overall pattern to me is not a hugely positive pattern. It's basing out around this 107, 108 area, 107, 90, 108 area. We are forming a box. Thank you, Paul. Perfect. Okay.
Yummy.
So, I love box
Yeah.
pattern. Well,
They
the
love it.
reason why, as you guys know, the reason why I love box patterns is because they become eminently tradable and everything becomes a binary decision from here on in, right? So breakout from the box, we'll probably go with, and we'll reverse quickly and go in the opposite direction if we get back to the point of entry in any point of entry, confirmed point of entry in any meaningful way, right? So I am bullish on the US dollar at the moment from a seasonal perspective, and so consequently, and bearish on the euro. So consequently, my thought process is I'm trading this probably for a breakout of the box to the downside, and then we'll see what happens if it tries to get confirmed. I think the surprise trade for everybody would probably be a move to the downside, but this has been rotating now all the way through almost. Actually, if you go back to February when COVID first started, we haven't actually made any headway whatsoever. We had to go at strengthening. And again, thinking about this logically, right? So since COVID started, we had to go at strengthening the euro under COVID. And then we rotated all the way back down again to a brand new low in the euro, which we then bounced from in some crazy, oh my God, way. And then we've gone into a funk because probably people have no idea what to do next because they've tried the long side, they've tried the short side, nothing's worked. Okay, they've given up and now probably positioning in this market probably as low as it's been for a while, which we can probably test off the Commitment to Traders report, which I suspect will confirm that, I hope. But
it's also like a vol meter too, isn't it, really, at the end of the day, I think, Julian, where volatility started, you know, pretty much at the first bottom of that range you've got there, Paul, went up to Billio, came down to Billio, there's all your vol going in, and now it's eased off. And that's what we're seeing right now.
Yeah, and just looking at the commercial positions, interestingly, the commercial positions are overall quite short of this. So they're sort of backing up my seasonal pattern trade. So, you know, again, you know, as with all of these things, we don't take a position just because the seasonal support it. We don't take a position because the Commitment to Traders support it. We take a position because actually something's happening. So, you know, my sense is with the euro looking for downside, Paul, but at the moment it's going nowhere and it's sitting in a box. It might sit in a box for another month. But if it does start to move, then my interest and we'll be doing some stuff. Look, that's my scoot around what's going on. Do we have time for gold, Paul?
Mate, we always have time for gold, particularly as Angie's not here today. It'd be good to do some gold if that's okay with you, mate. Let's get it over, eh?
And can I be really frustrating and ask you and trouble you for a bar chart on this one, Paul?
Yeah, mate, no problems at all. I think I can remember how to do that.
Thank you very much.
Do you want to colour them for you? Or are you okay with the blacks?
I'm okay with black. Black works for me. When I had to write them in, I wrote them in with a black crayon, Paul, so I'm absolutely fine with that. In the days before they had TV, you know, black and white telly even. So, okay, so here we go with gold. Here's the analysis. And actually, if you think about that euro chart, there's actually quite a few parallels going on here, but in the exact opposite way. You flip this up the other way, you could actually see some quite interesting parallels there. The gold market for the time being is consolidating at the highs. Is this a trend reversal in gold? And that's the question that everybody is asking. At the moment, it is still trading near the highs. And so your conclusion has to be, until proven otherwise, it appears to be going up because we are looking at higher highs on the overall pattern. And yes, we're forming some kind of horrible flaggy triangle-y pattern at the top here over the last couple of weeks. That's awkward, and I hate them, and I detest triangles with a vengeance. But if you just look at the flaggish approach to this to this overall pattern, nothing in here is particularly bearish, and I'm quite comfortable that the market is trading from a positive perspective. But then the question has to be asked, as it always does in this situation, okay, so if we're bullish, right, where are we wrong to be bullish? And that's the question we always ask ourselves as traders. Here's my view. Okay, the market's been consolidating for a while. After a consolidation, a new trend starts. There could easily be an opportunity here for the market to go in a different direction to the one that it has been going in, and surprise everybody. Thank you, Paul. And the challenge I have with gold is that it's actually gone nowhere for 2 months, and really, what's gold waiting for? That's my question here. Bitcoin's gone up, inflation assets have gone up, we're watching the commodities all rally. Why is gold going quiet? If people bought gold because they were defensive, yeah, I'll come to that in a second, Fad. Thank you for the question. If we bought gold here to be defensive, right, then the stock market, the Nasdaq's almost at new highs, guys. Bit late to be defensive. Should have bought the Nasdaq 2 months ago. And you wouldn't be reinvesting coming out of gold to go back into stocks here. That would be odd. So therefore, is it now to do with the inflation trade that everybody's worrying about? Or is there something else going on that actually it just caught its own momentum? What's really interesting is that while you look at the current, the gold product itself doing this, and you won't have this here, Paul, but if you look to the chart of GDX and GDXJ, which is the gold miners and the gold miner majors and the gold mining miners, the junior gold miners, gold mining stocks, they have been on a tear the last 2 weeks. So whilst the product itself hasn't moved, the gold miners have been moving, which again is interesting, right? So people are then saying, well, they got cheap, so I'll buy those because I don't really want to own the asset, but I'll own the gold miners. And hopefully they'll be unhedged, so if the market trades up, I'll be better off. But in the meantime, hopefully I'll pick up some kind of dividend out of it or something like that. So there's still activity going on in the gold space, and it's still tremendously positive what's going on in the gold space. So again, until proved otherwise, we're bullish. Where would we be proved otherwise? Well, pretty clearly that bottom horizontal line would test everybody's patience. So we go significantly through that. And I think we have an action point for us to think more carefully about any long positions that we have.
Jules, just before you answer Fed's question, question on triangles. Generally, if I hate something, it's because it's cost me money, but there may be another reason why you don't like triangles. Could I please have an explanation as to why?
So triangles create triangles, Jeff. It's one of my great frustrations. What's actually happening is the market's consolidating and it's just not breaking out. So you end up taking lots of trades which lose you money. And that's one element of it. And second, all you do is seem to work your way into a bigger triangle. And so therefore you go, well, do triangles work? Well, work for who? If you're selling volatility, they probably work. But for everybody else, they're just frustrating market consolidations. Let's go and find a trend elsewhere. They're really these days I have less patience to even bother to look at them. I just look at the market and go, yeah, it's consolidating, so what? I am not going to take breakouts in this unless they're really proved.
Yeah, happy days. But they do produce false breakouts, which are really nice.
They do.
You'll be long on this gold, won't you, Jeff, above that bar that's just retested the top of this triangle, won't you?
If I'm a gold trader, I probably am, but I don't trade gold. But I also see it's closed below that trend line, so I'll also be open to the false break to the downside. But I'd like to see that underneath the weekly pivot, obviously.
Nice. Sorry, I've just got the chat box up. It does weird things. Sometimes you can find it on Zoom, and sometimes it's more difficult. Sorry to hear about the lockdown for the guys in Malaysia. That's another 4 weeks. Is a long time. I've got to say, I'm looking forward. I'm hoping for Wednesday, Julian. We might get a bit of a spot. I think I've been locked down now for 7 weeks, and you know, it's been nice. I thought we may be getting out soon, or a little bit more out than we are at the moment. And I do hope that it comes into Malaysia reasonably soon, and that Singaporeans get good news as well. Sorry, I diverged a little bit. Gold.
Okay, so Fad's asking,
Yes.
by the way, guys, I absolutely echo Paul's sentiment on that. Look, I've been here for 7 weeks. It is zero fun. It all seems very exciting and new the first 2 weeks where you're finding out how Zoom works. After that, and after you figure out how Zoom works, and you even manage to work on clicking off all the different security features that Zoom has to ensure that not everybody shouts at you when they first come into the meeting. After that, it all gets really rather quiet. And whilst we are very lucky and very fortunate in New Zealand to be under lockdown and be able to still go to the beach and enjoy what has been a fabulous autumn, other people are not so fortunate, and I have total sympathy with you guys. So, hey, Fad, one of the interesting things is, I think what you're referring to there is the correlation between the US dollar and gold, or the negative correlation between those two. Some of the books that you'll read will talk about gold can't go up if the dollar goes up, because there's a correlation. It's treated like it's a currency, and there's always a negative correlation between those two assets. Well, yes and no. So there have been periods of time when the gold market has responded very much to the overall dollar index and the dollar market, the US dollar, and they've moved in opposite directions. And there have been times when they've completely and utterly ignored it. So I think this is one of those times. I think gold is being seen as a inflationary asset class. And at the moment, we are seeing the beginnings, and I say this very guardedly, the beginnings of a secular shift to an inflationary environment. We're just not sure how we're going to get there. So I believe that governments are going to do even more to monetize debt, and we're going to get there from a high debt level. Other people believe we have to have a big major debt sell-off first, and then we're going to, out of desperation, monetize it. So depending on whichever way you go, I don't think people's opinions about the future outlook for inflation are that much different. It's just the methodologies to get there, and gold will be a key player in that. Yes, gold should be worth 2,000, 4,000, 5,000, maybe even 10,000. We might even get there by the end of next year. I don't know. It could be anywhere. Who knows with any of these things? But they could also go down to 1,300, which is the breakout first.
Julian, do you mind if I ask you a couple of questions about this? I was reading something about the other day, and it fascinates me. So the central banks, when we say they're printing money, they don't print money. They just electronically give it to themselves in their account. They just go, I'd like $100 billion and put it in my account. And that's literally create an electronic transaction where they give themselves money. I don't know why they don't let me have one of those, Julian. I'd be fine with one of those. If I could have a little electronic thing, just give myself some money, that'd be cool. But then they buy government bonds, well, in New Zealand, they're buying from the secondary market of government bonds. And creating more money will create inflation. So they give themselves money that's not there. They put it into a bank account, they magic it into a bank account, and they spend it, which is, I love the theory stuff. This is really cool. Then they buy government debt so that government can the government can have money to spend. So the government then sells them bonds, and they use the imaginary money to pay the government for the bonds, and the government uses the bonds, that money, to stimulate the economy. And when the bonds mature, the Reserve Bank own them, having paid for them with money that isn't real. So they just surrender them at no cost, and the money comes out of the economy again. And that's why we're not going to have hyperinflation. Is that the theory?
Well, I think
well done, mate.
Yeah, you can make a video of that, couldn't you?
Yeah, you're sort of halfway there, Paul.
Yeah.
Look, yes to everything you said, and I'm not going to argue with you about the methodology. There is one slight flaw in your discussion, which is the money that the government gets for its bonds that are bought by the central banks, or the bonds that are bought in the open market, and the money that's given to the banks has to circulate through the economy. Now, economists call this, because we have to confuse everybody, economists call this the velocity of money. So the speed at which it runs around the system.
Super important, right?
Very important, because what's been happening in the last 15 to 20 years is that velocity has been falling. So in other words, you've got to produce the same economic impact for the money that you create via QE. You've got to create a lot more of it, because the velocity has fallen by more than half. So in other words, think I've got to do double what I did 20 years ago to have the same economic impact. So if I want to have double the economic impact, I've got to do 4 times as much. That's why all these balance sheets are blowing out. How about we think about it a different way? Velocity is falling because the effectiveness of that money circulation is falling because people don't want to borrow money. That's the big challenge, right? So how do you make
people don't want to lend money?
Want to do? Ah, well, there is
both
that.
things apply, don't they?
I'm actually not so convinced about that. I don't think anybody out there would ever claim they've had a funding problem the last 20 years, apart from some small, I can't remember the name of it, in 2008 and 2009.
So, Julian, the reason that every country in the world can borrow trillions of dollars at the moment is because they're printing the money that they're borrowing. But now we've got more and more money and it's moving more and more slowly, and speed of money shows growth of economy. No speed of money, no growth, right?
Correct.
So when we're finished with financial crises and pandemics, the underlying economics that we're using don't work long term.
No, so here we go. So what I'm now saying, and this is where life gets really interesting. So sorry, we're going to continue with economics lesson. I hope everybody can.
All right, guys, we're going to give this 2 or 3 minutes. I won't let this drag, because I know we're trading, so I don't want this to get super long-winded for hours. But I find it fascinating. I'm going to give another 2 or 3 minutes. We'll move along from it. Yeah.
So where it gets really interesting is when you believe that velocity is going to stop falling, right? The velocity of money, so the speed at which it circulates, will at some point, by definition, mathematically, it has to stop falling because it can only get to 0, right?
Yep.
Okay, so during COVID, what's actually happened is that velocity has continued to fall, right? As you'd expect, everybody's thrown up. It's a truly horrific time for many people.
No one's spending money right now. No businesses are open. No countries are open. No one's spending money. The money, the rate the money's traveling would be at all-time lows, I would have thought, right now.
Correct, and that's been reinforced by people's expectations that inflation doesn't exist. Well, now what's happened is, Paul, and you did mention earlier, which is the reason why I started down this road, that you said, well, nobody's giving me the money. Well, actually, I would contend this time around that just about every single government on the planet has done precisely the opposite. They have given you heaps of money, Paul.
In fact, if you live in New Zealand and work in Singapore, they leave me out, both countries. Yes. I'm the only person in the world not getting free money today. I get what you're saying, though, that this money, what the government is doing is the government is giving the money to the people, so that people will spend the money to try and speed up the velocity of money again, to see if we can grow out of this, right? That's what they're trying to do, right?
Exactly. And when you come out of this, what you've done is you've reset expectations now. Okay, and now people don't necessarily think that QE is going to go to banks or the central banks. Governments are just going to hand you money, right? If there's ever a crisis again, or anything even gets a bit crappy, and what are people going to vote for? People are going to vote for governments that give them money. They're going to vote for tougher labor laws. They're going to vote for restrictive practices. They're going to vote for all sorts of things which are inflationary.
Oh,
so
and at some state, the governments need to get this money back, because the Reserve Bank eventually, the money that it imagines away again, and the government's got to pay for the spending bills that are coming now, not the money that they get from the Reserve Bank from the bonds, but all the spending's got to be paid for. So one thing that's coming is massive tax hikes, right? There's tax hikes coming across everything in the world. You can expect your indirect tax to go up a little bit, your income tax to go up a little bit, things like estate duties to go up a little bit. They're going to find taxes on taxes, and
again, that's a
inflationary.
possibility. But no, taxes aren't inflation. Taxes are deflationary, right? Because they'll slow the economy down. So why don't you handle it from the other perspective? Why don't you say, I'll tell you what we'll do. We'll leave taxes unchanged. What we're going to do is people tolerance for, do I have a job? Do I think 5% inflation is a lot of inflation? So what people will do is say, no, I'd rather have a job, and who cares what the inflation is between 0 and 5? I couldn't care less. 0 and 7, I couldn't care less. 0 and 10, I couldn't care less. 2 years ago, everybody was worried about inflation when it was more than 2. So my My point is all these policies are shifting, and all you need is for the velocity of money to stop falling, and then the money growth that will continue, that the central banks will continue, will then feed straight into an inflationary loop. Sorry,
Okay.
guys, super long explanation. I am inflation bullish. I think that this has been a secular change. Don't worry about interest rates, because interest rates will be lower than inflation for the next 20 years. This isn't about interest rates going up. They probably will drift higher, but who cares? And it won't be the short end where everybody has a mortgage. It'll be in the long end of the interest rate curve, the 20 and 30-year numbers.
And at the end of the day, Julian, this low interest rate fad for the last 10 years to make countries internationally competitive, so to speak, it neglects the fact that inflation is how you want to pay back debt. So heavily indebted countries like the US, they need inflation because it devalues the current day value of their debt.
Yes, they do. And the difference between Europe and the US is US has a younger population with a more inflationary bias because they borrowed more debt. Europe, it's the governments who have borrowed more money. The population is older and is actually cash rich, and therefore they will vote against inflation at every possible opportunity. So
I'm not going to give, sorry, after you.
No, that's okay. So in the medium term, if you're an inflationary government, you'd expect your currency to fall. If you're a deflationary government, you'd expect your currency to rise. Factor that into your thinking, guys. So when we loop back to how do we trade this, let's factor it into our thinking, right? We've had that conversation about Japanese yen and those interest rate differentials. This is another fundamental factor, long term, that's really important. It's complicated by the fact the US dollar is a reserve currency and everybody sort of wants it and everybody's a little short of it at the moment. But if we can get past that point, the US dollar is going to fall very dramatically at some point in time, I think.
Is the clock ticking on that, Julian, do you think?
Yes, I think it is, Jeff. And I think that the more the commodities rise in the world, so the shortage of dollars has been mitigated by the fact that a lot of trading in oil is done in dollars. And oil at $9 is a lot less expensive than oil at $65. So you don't need so many dollars, right? Woe betide us if oil recovers, because then the dollar bills go back up again and you create the shortage, and then you have the dollar rally going on again because everybody's short of US dollars. So some of these dynamics are really important to recognize about what's actually been changing. On the money flows alone, the fact that oil has come down a lot in price has been a huge mitigant to the so-called dollar shortage that we've been talking about on this show for about 18 months. But it doesn't mean to say it's gone away. It's just helped it for the time being. Yeah,
I think we're going to see the dollar shortage and the overnight interest rate issues that were with us late last year. They're not done. We're having a holiday from them, which is bloody nice, but they'll be back. Just want to check. We don't give investment advice, and we're here to talk about markets in general. But if you're looking to be diverse at the moment, some kind of inflationary play would be a good play in a diverse portfolio if what we're saying is correct.
Yeah, exactly, and that's not an unreasonable guesstimate. I don't tell people what to buy. I think people can figure out what a great inflation hedge is, and if you're not sure, go and Google it, right? And look, people often get caught up in this. Is gold an inflation hedge? Is gold this? Is gold that? Look, gold is gold. All right, people buy it for all sorts of different reasons. Indians buy it to put it on their wrists, right, and on their rings. Okay.
Yeah, and the Indian wedding season is part of the reasons for the seasonal buying on gold, right?
Correct. For the time being, gold has a seasonal bias to go down until August.
Yep.
So I'm sort of not excited about gold, for the record. My portfolios are still long, a small percentage of them in gold, way lower than it's been for a long time. And that's just me. I could be wrong on that. I refuse to be flat of gold. I will always be long for the time being because I believe it's as an asset class, it's going higher. But then, I've also, to what I was saying earlier, guys, had to think about other inflation-based assets as well too. That's not trading, that's investing, right? What we're talking here is about trading. For all I know, gold could break out of this to go higher. We're sitting in some kind of flaggy thing, and from a technical pattern, it still looks okay. But we're in a seasonally bearish time, which is what really bothers me about gold and has bothered me about gold for the last 3 weeks. I think it needed to have done better the last couple of weeks, and I'm worried that unless it performs very well very soon, we're going to throw up. And gold will have a habit, as it does do, of absolutely throwing up when it happens. You could easily see $200 off the price of gold in 2 days. And again, if you look at the commitment of traders in the gold market, I haven't had a chance to have a look at that recently. I strongly suspect that there's a significant amount of small trader long volume in gold still. I would imagine that small specs are very long of gold, and they traditionally have had a terrible track record of predicting the future direction of markets.
Want to talk about one thing before we finish this, and I just want to give people are wondering who's buying US dollars at the moment in the world. And I'm going to tell you guys who I think it is and what I think is happening. And look, this is all different theories, but one thing that I think about in these times, right, is when I got home from Malaysia, Singapore, and Indonesia, I came home for 2 days, and the government said if you come in by Sunday, you can go home and stay home. And on the Tuesday, the Prime Minister said, look, if you've come in while you're after the date, we said actually we'd rather you in quarantine. Can you go in quarantine? Didn't say you had to. But I packed up my car and I went up to Ski Chalet and I spent 10 days up there in isolation because the government asked me to. And the last thing I did before I left where I live, I went to the bank and I got a crap load of cash. And it's irrational. What am I going to do with it? I had my food and my drink. I was going to isolation to sit in a cabin on my own for 10 days, but I've still got the cash in my wallet. And I think when these things happen, people buy particularly US dollars because it's considered to be a universal currency. And I think around the world, people buy and hold on to cash in times of uncertainty. And I think there's going to be a certain amount of buying of US dollars. While coronavirus, destroys the countries we're not talking about, the countries that don't have the money to fight it properly. I don't just mean America. I mean like Africa and parts of Asia where there's just not enough health spending. I think you're going to see people buying and holding physical US cash. Because if you're in, if you're in some of the poorer countries, US dollars is probably the most valuable thing you can have when everything around you fails. And while that may not happen, I think there's some real fear of it happening. I think that drives the behavior. As I say, I went to the bank knowing I didn't need the money, and I still went and got the cash. I had cards, I wanted cash. I think that's part of dealing with uncertainty. Right, anything else before we go as far as charts go, Julian? I do want to let you go at some stage. I really appreciate you being here. It's getting to around 10 o'clock tonight, New Zealand time. As we've been talking about with changes to Trader Talk Radio, the analysis guys are going to come in about once a month. We'll see Julian on the second Sunday of most months. Those that are particularly interested in his pilot program, we don't have a name for it yet, but if you want to sit on a Zoom call with Julian for an hour every Sunday and have a one-to-one once a month with him, let us know. We'll talk some more details about that. It'll come out on the 17th, and we'll have the first couple of guys join him in his program on the 24th. Anything else from you, Julian?
No, Paul, I think that probably pretty much covers it for me. And just one thing, just to add to that, look, guys, I run these mentoring programs about once every 2 or 3 years, and they last a little bit of time, and then things just get away from me, and I have to stop again just because of my work-life balance. So Paul talked me into doing this one now that we think is going to last for a few months here, and but then it'll stop again. And so I take just anybody who's thinking about it, just take the opportunity as soon as you can to come and have a chat. And we keep the group small because I want people to be honest. You will come along and you will be made uncomfortable. Which is the object of the exercise here. We want to make you guys better traders. To do that, you've got to be felt a little uncomfortable, but think about it uncomfortable in a really, really positive way. You will come out of this understanding more about yourselves and more about trading. And that's the goal of what we're trying to achieve here. Thanks, Paul.
At the end of the day, Julian's the grandfather trader. He's the one that's 30 years as a professional trader. He's been doing it longer, and I think it's fair to say, look, we don't keep score, but I imagine that in his life, he's made more money from trading than anyone else in the team. He's been doing it for a long time and with large amounts of money. So I get the chance, and he's right. In the time that Julian mentored Ainsley, and you guys have heard about the money that she makes, and and he really took Ainsley from a position which was far worse than any of our clients. Ainsley really wasn't doing very well in those days, and took her through to being a bloody good professional trader. So if you get the chance, spend the time. And we did say in May we were going to try and get you the best stuff we possibly can. We've given you a chance to work with Justin. We're giving you a chance to work with Julian. There's a little bit of stuff going on around, possibly a little bit of smaller stuff, perhaps with Ash. We'll have Orlando out not far away. We've had Ainsley out. What we're rolling out in this month is what we would normally roll out over a year, or at least 6 to 12 months. And we're very keen to give you guys every opportunity while you guys are home to take advantage of this. The truth is that 6 months from now, Julian will be too busy to start this and you guys will be too busy to do it. So it's a really good opportunity right now to get involved and to learn as much as you possibly can. Thanks, mate. Thanks for coming in. Much appreciated. I'm just going to check the chat box. I like strict teacher. He just told me off, mate. So if he's going to tell me off, he's going to tell you off. You'll get a strict teacher. Don't worry about that at all. Rightio. And look, it's not about people being strict or not. It's about the knowledge. And there's, the knowledge that Julian brings to our company is, well, it's just invaluable. Mate, have you gone? Thank you very much, Julian. Much appreciated.
Cheers, Paul.
Right.
Cheers, everybody. I'll see you next time.
See, mate, and I've got to say, Paul, and to Julian, if I wasn't 2.5 years into a 5-year business plan, I'd be in the queue. Got to say.
Yeah, and we're really lucky, Jeff, because while I'm 100% sure that's true, we actually get a little bit of exposure through through stuff that the clients don't, and we do get a bit of chance to talk to Julian one-to-one and have a few chats here and there around the world as we travel and catch a bit of stuff from him. So. Yeah, which means we know how good it is, but also it's probably more important for some that don't get quite so much time with them. Look, guys, it's a bit different today, and one of the things we're going to do, we want to have different people come in and do the first sort of half hour, 45 minutes of the show each week. We want to get a different flavour, and last week we had Orlando, who's very technical, very levels driven, very excitable, if you like, in there, and you've got Julian, who's perhaps a different approach and the overall market stuff and the economics of it. Next week we'll have Paul Hutton come in and he'll do a lot of technical stuff. 31st of the month we'll have Ash come in and bring his balance of all that stuff. And I really encourage you guys to turn up and enjoy it. And I hope you haven't minded the economic conversation. Part of being a trader, I think, is you need to have some knowledge, that kind of stuff. I'll see if I can forward some stuff into the broadcast group tomorrow around it. Jeff, technically, where are we? Look, funny week, wasn't it? Last week, every weekly chart looked like reversal, and it didn't reverse. Where are we now?
Yeah, look, funny thing. I agree with you 100%. I thought, and I think I started last week by saying I'm embarrassed by the amount of opportunities that are going to come up this week, meaning the previous week that we've just been through. And I've got to say that a couple did pan out, but the opportunities were few. But that said, and I said this in my summary of the week, that it was all quality, not quantity. And those that did set up were pretty cool, I've got to say. Let's start with, well, as you know, guys, I'm all about structural things like channels, channels being one of them. And it doesn't matter how long they take to fill, but when they do, by gee whiz, they're good fun, I've got to say. Euro Aussie has been one of those that, and we can go back quite a bit now to when Euro Aussie turned off the top of that channel with a vengeance. That was a massive bar that we saw there on the monthly chart. It was a massive bar we saw on the weekly chart. And on the daily chart, it was a bloody massive bar as well. And we came back into that channel. And we've had a really good time since, because it retested the top of that channel. And we've managed to trade that once, twice. And I know the people in my group are going to hate me for saying this, but I'm also into it for a third time. I gave my group an option on Wednesday, it might have been Tuesday, I can't quite remember which day it was, to trade pound Aussie, Euro Aussie, or pound CAD short. And I chose to demonstrate pound Aussie short. Not a bad thing, I've got to say, but Euro Aussie went at the same time. And this is potentially the third phase of, well, it's probably the fourth phase, but it's the third phase of our trading since we came back into the range. So we've traded this bit. We got a good exit. We got another good entry. We got another good exit. We got another good entry here last week. And now's the problem time. We've got to get through this level that we're currently sitting at. I've got no drama with that because I have taken profit a couple of times since we got into this move. What I do fear is saying to you guys, get into Euro Aussie short right now, because it's not the right time. This is just not the time to get into it if you're not into it already. And I don't even think a pullback's going to help here. If it comes off this level, I think we're potentially going to go quite a ways back in this journey. but so far so good if you are in happy days. And I won't dwell on this for that reason, because I don't think there's a trade here to be had right now. I don't like to trade at these levels. This is obviously a strong support level, and for that reason, I'm going to say if you're not in, then probably stay out right now. What would change my mind is if this level went, so this same level that we're at currently, if it went and was retested, then you can probably think about trading it. But I don't know how much is left in this. Maybe down to 163.20 area is where I'm thinking, which is another 260, 70 pips away. And that's probably where I'll look to get out of this if we're fortunate enough to get that coverage. As I said, pound Aussie was the one that we chose to take. That was the trade I put up for the guys in the, can't remember what session was in. We do so many sessions at the moment, it's not funny. But this came off, and I said this at the time, I thought this was the biggest tweezer top I had seen for many, many a moon on a weekly chart. And I expected to kind of get in around about here somewhere, but we were fortunate enough to go right up to this level and put in that lower high. I think we got in about here somewhere on our first wave. We got out about here. We got here on our second wave, as you can see, and we got out the week before at this level again, and we managed to get in at a really nice level again this week, which is here. Same thing as Euro Aussie. We've got a technical level here that is suggesting strong support, and that's going to be an issue. But again, we've taken profit twice on this, so it's not going to be a huge issue for us. Obviously, we'd like to see this break through here, and if it does, then goodness knows where. Really, this has got a lot of potential, this one. It's come off a big false break of that, let me put it on the monthly chart, of this monthly trend line. It's a massive false break. If it does pan out, this could go anywhere. And I'm talking, 161s, 162s down this level. I would love to stay in this for all of that period of time, but that's probably not going to be likely, because we obviously will get lots of little nooks and crannies along the way. But I'm really keen to keep this going, pound Aussie, if I can. So having banked twice, as I said, I think I'll keep this stop as wide as I possibly can for as long as I possibly can. If we hit a hard level, then maybe I'll have to trail it, but I think there's still plenty left in this pound Aussie. That said, the Aussie pairs are going to be interesting this week. And the reason I say that is because I think we're going, pardon me, to a little bit of strong resistance. And I also think the dollar has got a little bit of oomph left in it. I'm a massive bear of the US dollar, I've got to say, but I think this week may be a little bit on the different side, and not necessarily Aussie US dollar, but there's a few pairs that I'm going to show you in a tick that are looking particularly vulnerable. Last one that we traded this week was dollar Sing. And I think I've only traded dollar Sing once before. And this, I guess, is the benefit of trading with a buddy, because Ash pointed out to me on, was it Wednesday or Thursday? Wednesday, might have been Thursday, that he was looking at dollar Sing. So as we do, we have a look at the chart, and lo and behold, we saw that dollar Sing was at the top of a descending channel, which is this one here, having come off big bearish engulfing bar, a couple of lower highs, a couple of lower lows, lower high, lower low, lower high. And one of Ash's favorite chart patterns, of course, as we all know, is the head and shoulders. So I said, Ash, is the head and shoulders here. We come back underneath the trade line, put in a lower high. We've broken through this trade line. We've broken through the daily pivot, and we've had a retest of the head and shoulders. We've got to trade this. So we did. And this was only a 1 hour chart that we traded this on. But my point is nothing to do with the trade, except that this is exactly the same scenario that we've been trading all the way through. We've been looking at structures, so channels, rectangles. We even mentioned circles, but I can't find a way to work that one yet at the moment. That seems to be a little bit tricky. But going back to things like triangles even, and that was hence my question to Julian earlier. Why doesn't he like them? Because I do, not so much because I think they give us direction in the first instance. In other words, a descending triangle may not necessarily break to the low side, but it will break. And it may be a false break, yes, but if we can pick up that false break indicator, then happy days. So we do that by narrowing down or drilling down into the lower time frame. So this on the daily chart, if that looks like a false break on a 30-minute chart or an hourly chart, look at that. It is. It breaks, it comes back, it retests the trend line. And that's exactly how we traded this. In the meantime, it's created a head and shoulders. It's broken the neckline of that head and shoulders and come back and retested it. So this is the MO that we've been using for quite some time now, and it's really going very, very well. We're really happy with the way that's working. And I would strongly suggest that no matter about COVID-19, no matter what's going on, eventually, and high volatility, low volatility, don't care what it is, eventually these moves will go to a support or resistance level. And if you can identify those support and resistance levels, then I think you've got a very good chance of trading these structures profitably. And that's what I try to get across each and every day in our, pardon me, in our webinars. I'm going to go through the ones I'm looking at this week, and Aussie dollar is one of them. And I've been a bull for quite some time on the Aussie dollar. That's changed. And the reason it's changed is not because I think this can't go higher, because I've got a target up here of 66.75. But I don't think I want to trade through this level here. I could put in a few trade lines as well, or trend lines, sorry, they're legitimate trend lines, I would have thought. That would suggest that this is a vulnerable level, as I said. I also think the dollar has got a chance of putting on a little bit of oomph this week. The one thing that I said last week, and I'll have to maintain that scenario, and again, technically, this should have, in my humble opinion, come back and retested or tested really the monthly pivot. The fact that it hasn't done that doesn't deter me from thinking that, okay, where are we, the 10th of the month? Yeah, we could go up here, most definitely, and then we could crash back down to the monthly pivot. There's not a super strong horizontal level to suggest that this can't go to 65, 66, 75, which is my target area, I've got to say. And we've traded this up quite substantially, not necessarily versus the US dollar, but versus the pound versus the euro, as I've pointed out. But I think this is vulnerable right now. If it goes through here, then yep, it's going to 66.75. I agree with that, but I still see the untested monthly pivot. Weekly pivot's going to move up to probably roughly where we are now. That's going to provide resistance as well. So I think tomorrow morning, when I have a look at the charts, my first impression is going to be I want to trade the Aussie short. There is, of course, more news coming this week that can change a lot as well. In particular, the Aussie short versus the Kiwi is where I'm going, and I'll get there in a minute. And the CAD. So not necessarily trading it against the dollar, but definitely looking at it versus the CAD and the Aussie. So let's do that now. And here's a very, very clear box, or if you like, consolidation rectangle. Few things I like about this. One is that we've slowed down. Momentum's definitely slowed down here. You can see that. And that's where we've come off the top. We've gone into consolidation, and I would suggest to you that this is not about the Aussie. This is all about the CAD and oil, because the market is now thinking, or sorry, I believe the market is now thinking that oil is likely to rally. At some stage, oil will rally. We all know that, but we really don't have a reason for it to rally right now. But the market is starting to think, okay, Aussie CAD, look at where we are. We're at highs that have been significant for quite some time, going back to 2017, which is where we put in this low, which was the support level. We've come back at it a few times as resistance, haven't been able to crack through there. Interesting. This, by no coincidence, of course, is showing you through this area here, that oil has crashed, and so has the Canadian dollar in particular versus the Aussie dollar here on this chart, of course. I think we're at a strong level here where this could turn around regardless of what happens with oil. So this is going along with my thesis that Aussie this week is probably vulnerable, and I think against the CAD it's more vulnerable than most. This will, of course, rely on what oil does, and I'm not going to predict or suggest to you that I've got any idea what oil will do, but if it rallies even a few dollars, then I think Aussie CAD is bound for the monthly pivot, and that's what I'll be looking to trade as of tomorrow. Don't necessarily see a trade at the moment, but if I look at that box, then all I would need to see right now, to be fair, is a lower high, because we've already hit the top like 1, 2, 3, 4, 5, 6, 7 times. If I see price pull back here, the daily pivot won't be there, of course, but it won't be that far away. It'll probably be here. If we were to pull back underneath that and retest it, not necessarily this trend line because it's now null and void, but I think there's a really good opportunity coming up this week to trade Aussie CAD short, and you don't need to see too much to happen here. A little bit of a dip and then a lower high, and I'm in like Flynn, as they say. Aussie Kiwi is the one that I'm well, I won't say it's the best, but it's up there with them. And unlike what I've seen about, or what I've just suggested with the Aussie CAD, we really don't have a clear reversal situation, because we don't have a bearish engulfing bar. We don't have a double top. You could argue that we've got a misfit head and shoulders here, if you like. I get all of that. But what I see more than anything else here is something that I like to see, and it's potentially three false breaks.
That's one uncomfortable head and shoulders for that poor guy.
Quasimodo, I call it. That's the Quasimodo setup, that one. The poor old bugger. But what I like more than anything here, and I call it the Three Little Indians. I don't think it's a classic textbook description of the Three Little Indians, but for mine, it's a rejection of a level or a false break of a level 3 times going in the same direction and increasingly. So if you picture what I'm saying here, I'm looking at a false break of not only the top of the rectangle, but the monthly pivot, a second false break of the top of the rectangle and the monthly pivot. This is potentially the third false break of that particular level. Now,
Yeah, I was looking excited by this too, Jeff.
Sorry,
PH is in the chat box telling you there's a chain tracks reversal on the daily chart, and he wants to get short this as well. He seems
okay, cool.
On short. I mean, anytime we get 2 Australians telling us the Aussies going to go short against the
Go PH.
We know there's something going on.
I wonder where that comes from. That's interesting, that. But as I said, it's my little version or my version of the Three Little Indians. And again, I can't remember what the textbook says about that. But I was looking for the third Indian here, and I got the bloody chief. That was the problem. He's gone too far. It's too big. I really wanted to see something exactly like that, and I haven't. But the same thing's going to apply, as I said before, on what was it? I can't remember. Aussie CAD maybe. All I need to see here is a break of this trend line and a retest of it, and I'm really short really fast. I think this has got huge potential, and if we go out and blow that up a little bit, the potential is back to the bottom here. The one thing I don't like, well, when I say the bottom, you guys haven't even got that on your charts, I'm sure, but, and in fact, that's getting a little bit old in the tooth, I've got to say, but there is strong resistance here. and I'm very, very much on board with that. I don't necessarily think that we're going real short, but definitely to the bottom of this range, and we're talking from here-ish. Let's say we get in about that level, we've got about 380 pips. So, you know, anything in the 70, 80, even 100 pips of risk here. Let's hope for 40 and trade it down to there. I think I'd be quite okay. Then I'm probably looking to turn this around and go in the opposite direction. So I don't think it's a massive thing, but I think it's an imminent thing. And I'm more than willing to trade that Aussie Kiwi short if I can actually manage to do that. I think I've got 2, maybe 3 more that I want to look at. And they're very much in the same vein. Although we haven't really gone to the top of this range on dollar Swissy, gee, it's all but, and it's a very clear range that we've now gone into. Come off this, let me go a little bit wider, come off this big trend line up here we've put in, and massive through this volatility scenario, and this is the same on those charts. We've been through that volatility area, gone into a consolidation pattern. The last time that we visited a resistance level or a level, a significant level, was resistance. So we've come off that, we've put in a lower high, and now we've gone into range, as I said. Same thing applies on all circumstances. All I'm looking for here is a significant high, lower high. Where will the daily pivot be tomorrow? Oh, maybe here, pretty much where that white line is, wouldn't be far away. So a pullback to there and a significant lower high, I think, I'm sure.
You know, you can put the trading software on and it'll give you the daily pivot for tomorrow.
Yeah, I do, but that's going to throw me out. I'll be totally confused by that. That's too hard for me.
Okay, no worries, mate. No worries.
I know it's not too hard. Okay, I'll do it just to show people.
No, you don't need to. You know, mate. I'm just making sure you knew you could do it. You know.
Let me do it so that next week I can actually forecast it. So it's Market Scanner, right?
Yeah, Market Scan 5. That's the right one and everything. Put it on there. It's a complicated process, Jeff. You've got to put it on there, and the new one's going to open up on the left instead of the right.
Holy!
So you're used to opening up on the
you're
used to opening up on the right, and it's going to open up on the left. There you go, mate. And there's a button there on the right hand side called DP, and you got to click that, and there it is.
Where is it?
It's the blue line.
Can't go on up. How's it gone up?
No, it's gone down. Top of the white bar. Click DP again, and it'll disappear.
Oh,
DP
right,
is
gotcha.
blue, and the weekly pivot's orange.
Gotcha. Okay. So that's good. I'm happy with that. A little bit more awkward. Maybe we've got to come back up here and then get underneath it again. Now the pivots are going to be very, very difficult. You're making this hard, mate. If I hadn't done that, I would have been super confident.
Mate. You'll change all this, and tomorrow morning it'll turn up 3 pips in a different spot and be.
No, it's got to get. To be fair, it's got to get back up here. That's where I want to see it. And if I get that lower high up here, then we can go nuts and trade it short. I think that'll be really the way to go. The other way to go, of course, is if it breaks below these pivots, then comes back against them. You've still got your lower high, trade it to the bottom. It's going to take a fair bit of profit away from us. That's the only thing. Euro dollar. Now, I don't have any confusing scenarios around the euro dollar, except that I'm massive dollar bear, as probably everybody that's ever heard me speak knows. But what I see right now is pretty clear to me. We're at the bottom of this channel again. We've been here many times before. And at the same time, we're at a bit of a confluence of the bottom of this was not intraday. It's probably a 4-hour channel. Yeah, daily rectangle that I'll point out in a second. We've come, top to bottom, bottom to top, top to bottom, bottom to top, and we're just oscillating in that area. So I don't see why that should change anytime soon. Don't see a reason for it. Put in this mongrel bar here on Friday. Had that been something a little bit more suitable, then I think we could have even placed an order long above that. I'm almost there anyway, but I'd like to see something a little bit better. Again, let's find out where that daily pivot's going to be tomorrow. That'll be interesting. Can I remember how to do that? That was hard.
Yeah, mate, you got to put the market scan on.
Click.
Click and it'll
And
turn up
here
on
it
the
comes.
left-hand side. Yeah, and you got to click on the DP
Daily
button.
pivot. Look at that.
Those boys are pretty
Magic.
clever, right? They do a really good job. I have some respect for them, the way they do all this stuff for us.
They do. I agree 100%. I must try and use it more often. Must make life easier. All right. So this becomes now a really easy thing to look for. Whether it actually happens or not is another story. But what we'd like to see is price maybe hit that that high of that dreadful bar right there. NFP, you can thank for that, I guess, and come back and test the daily pivot. That would give us, if it bounces off the daily pivot, obviously, a significant higher low, and we could then look to trade it to the top of that range. Profit here. Don't worry about the weekly pivot if you've taken profit there. Let's go to the top of the range, and then we can reassess and look for a short. But I think, short term, yes, we can trade this long. I don't think I'd like to be going too much further than that, because as I said, I think the dollar can have a relatively strong week. Pound US dollar is exactly the same, off the bottom of the range. I guess I should give you some context on this. We've also come back into another triangle. Look at that. That's a massive triangle. You can put that right out to the monthly chart. But the way I look at triangles is not to forecast where price is going to break, just that if it does, I want to know about it. That's all. And if you can look at breaks like this, which become false, or breaks like this, which become false, breaks like this, which become false, you can then trade them, and trade them quite successfully. So if you're looking at this as a false break, well, we've got a fair bit of room to trade this up to the top. So that's precisely what I'd be looking to do at this point. And if you go a little bit tighter into that triangle, you've now got an opportunity to do that, because you've got a significant rectangle here that's come significantly off the bottom. And now we're looking for another mongrel bar there, like the NFP bar we saw on the euro. If we were to now, I won't bother going through this process, but I can almost guarantee the daily pivot's going to be in here somewhere tomorrow. Maybe there's even a bounce there ready, set to go. I don't know. But what I would like to see is price just amble down here a little bit, give us a significant higher low. And what I mean by significant is not just a bar. What I really like to see is this kind of thing. So we come down, we find a level, then we come back off it over time, and then we get the swing. That's what we're looking for. Swings. We're not looking for instant bars. We're looking for price that actually comes to a level, goes away from it, and then gives us the swing that we're looking for. So I don't want instant gratification here, although that's marvelous when it comes. I would like to see a significant higher low here, and that's what I mean by a significant higher low. Then we look to line up some trend lines or some trade lines, look for a slingshot setup, and away we go to the top. Mate, I think I've come to the end. Maybe the Kiwi. Yeah, the Kiwi. Okay.
Kiwi. The greatest currency of them all.
There you go. The best of them. There's one little Indian, maybe. There's two little Indians. 3 little Indians gets us up to here somewhere, I think. And we've come out of the top of this range now. But we've also got another structure here that has false broken here, false broken here. Gee, I'd love to see a pull back to the weekly pivot, which won't be there. Where will it be? Won't be far away, though, I don't think. It might be the top of the range. That'd be perfect. If we came back to retest the top of this range and potentially tomorrow's weekly pivot, gee, I think there's a long on here, Paul. For the Kiwi, are we on board with a strong Kiwi tomorrow?
We're long Aussie. We're short Aussie Kiwi, so we're long Kiwi, right? I mean, first country. I mean, the news tomorrow will be interesting, because the news tomorrow should be we're going back to level 2, and that might be priced in. But again, level 2 suggests the economy is going to improve. I mean, it's still going to be crap, but it's going to be better, and maybe not a bad time to be buying some Kiwi dollars. It wouldn't be all surprised to see a little bit of movement at a time when no other economies get printing good news. We may well see a bit of a move up.
Full of news for the Kiwi this week, of course. It's not just tomorrow.
That is true.
Yeah, so it could go the other way, but I'm a Kiwi bull tomorrow, and I'm an Aussie Kiwi bear.
I like it when you say that. Paul's spewing in the background. He's saying he hates going short Oz in New Zealand, but he wants to make the money, so he's going to make the money. Fair enough. Too.
There you go. We're both of the same opinion.
I don't mind that at all. Look,
yeah, that works.
Is that us, Jeff?
Mate, I'm done. That is it.
Guys, if you're in the room, I'll have a look at chat in a second, but lots going on for you guys this week. Monday, 8 p.m. Singapore, we've got Willie doing his support group. Monday, 8 p.m. UK, we've got Chloe doing a support group over there. Tuesday, 8 p.m., we've got Chloe doing a follow-up group to the new Europe group we did on the weekend on the online program. Wednesday, I'll be in 6:30 on GoToWebinar to talk to you guys again, hoping to make some announcements on Wednesday. We had a bit of a quiet week on announcements last week. We've been doing a lot of stuff this week. We really just need to make sure we get through some of it and implement it well before we start doing too much more. But I'm hoping to make more announcements on Wednesday about stuff that's coming up. I know the Malaysian clients are locked in a bit longer, so having a bit more for them would be good. I encourage you guys, and thank you for coming along. At the end of the day, if you want to become a better trader, you've just got to work towards becoming a better trader and coming along and listen to these kind of things. You get the chance to listen to Julian on market structure and Jeff on technicals. You get a chance to learn and become a better trader. It's well worth it doing. I congratulate you guys on being here. Jeff, you'll be in Monday, Tuesday, Wednesday, Thursday. UK session around 3 p.m. Singapore's free. The US sessions that are paid for one, it's about $1 a day, isn't it? 30, $35 a month to come and listen to you on Ash Trade for an hour and a half, around 9 p.m. Sing each day. Too good to be true. I see a couple more subscriptions coming for that as well. Guys, awesome. Going to really ask you, I really want to challenge you guys not to muck around here, not to play. Let's be good traders this month. Let's make good decisions. Let's have a proper plan. Let's be rigorous and take really high quality entries. Let's have a month where we say, actually, let's trade to the best of our ability and see where we are. Let's not get to the end of May and say, I know a lot of stuff and I'm doing some of it. Let's get to the end of May and say, actually, I know a lot of stuff and I reckon this is the best stuff I've got and I'm trading that. Let's see where we go. I'm really interested to see us trade properly for all of us. I'm not saying that everyone's not. I'm just saying that it's a real opportunity to give it some focus. So let's really give it some focus. Poor Hutton. Oh, he's in pain, the poor man. Don't worry, PH. It's the market. It may never happen, right? It may never happen. Look, I'd like to take the chance to thank Julian and Jeff for today. It is Mother's Day. I really appreciate them coming out. And look, I think the quality of the show, when you've got market technicians like Paul Hutton sitting in to have a listen, you've got some pretty good stuff being talked about. That man is sharp at looking at markets. To the rest of the team that have come along, those on YouTube, whether they be our team or people off the street coming along to have a listen. Hope you've enjoyed it heaps. Hope you get a lot out of it and continue on the journey. Become a great trader. That's what it's all about. And the best way to do that is to become a better trader this month than you were last month. If you do that every month, over time, you'll crack it. Cheers, everyone. Have a great Mother's Day today. We'll see you through the shows during the week next week, and we'll see you next Sunday. We're back same time, same channel with Paul Hutton in the analysis chair for the first 30 to 45 minutes next week. Cheers, guys. See you later.
Happy Mother's Day, mothers. And Crystal, I'll have a look at your circle tomorrow. Thank you.
Cheers, guys. Thanks for the messages, guys. Really nice. Thank you.